The RBNZ kept rates unchanged as expected. The US dollar is little changed to kickstart the trading day here for the July 9th trading day. We have little in the way of the economic calendar today with wholesale inventories. The only release at 10 a.m. We do have inventory data from the EIA for the weekly crude pieces, and we also have the 10-year coupon note auctioned off by the U.S. at 1 p.m. Other than that, it should be fairly quiet, and the markets are reflecting that quietness. So let's talk about the technicals that are driving these currency markets. We'll start off with the euro versus U.S. dollar. Looking at the hourly chart of this currency pair, the market's seen up and down price action. We are trading two new session lows in the early U.S. session. Here, that's a higher U.S. dollar, which has been the modest trend over the last 6 or so trading days after reaching a new high price of 1.18266 for the year, and going back more than that in trading last week. In trading yesterday, the price high came up to test the 100-hour moving average. That's the blue line in this chart. We did get above the 200-hour moving average, but found willing sellers against that level, moved down to an area that I've outlined as a support. Not only is it swing lows going back to these this period right through here, and even on Monday's trade, Tuesday's trade came right back down toward that level, found support buyers. So that was a reason to buy, and the market rotated back to the upside. We did get above these lows right through here, which tried to form a bottom as well, but then moved above it and traded above and below it, and trading here today. As you can see, we are moving away from that 117.16 level as we speak, making new lows and working down toward the low prices that we saw this week, and the low prices going back to this area right here near the 116.82. This 82 level is also within this yellow area right here between 116.63 and 116.91. The importance of that can be seen off the daily chart. If I go back to this period right through here, which is April 2021 to November 2021, we had swing lows here, trying to form a bottom here, but then broke below the floor and then came back up to where it was in that now the ceiling, and found willing sellers against that level before moving sharply to the downside through here. So that was a key swing level. And going back to our hourly chart, once we broke above that level in trading last month, at the end of last month, this area right through here, we used that area as support to move to the upside. Now we're using it as support on the move back to the downside. So we need to get below the 116.63 in order to increase really the bearish bias for the euro versus US dollar. First step is get through the 82 level. Let's take a look at the dollar versus yen next. If we take a look at the 4-hour chart for this currency pair, the high price that we saw in trading here today continued to stretch higher as the market sells the yen off in favor of the US dollar due to this the tariff news coming out of Japan. They still haven't figured out what they want to do. We moved into this swing area. Now the swing area has not necessarily been the best of swing areas, I must admit, but there are some different swing lows and swing highs going back in time where the price did find levels to lean against, like this one where the market fell below this level, retraced back up to it, and moved back to the downside. Admittedly, in trading this at 4-hour chart a couple weeks ago, we did move back above that level before moving back to the downside here. A failed break here, failed breaks here. Most of the highs, however, in this area. So it comes between 147.01 and 147.33. If we get above that, then we'll look toward the high price from a few weeks ago that moved up to 148.02. The high price for the year, goes all the way up to this level right through here. So obviously the price action has been mostly to the downside here in the dollar versus yen, but over the last few weeks, we've seen, more than a few weeks, we've seen a lot of consolidation mostly in this range right through here, with a move above the 147.33, taking the price toward the upper extreme for this currency pair. Conversely, if we continue to see rotation to the downside here for this pair, the 61.8% retracement of the range over the last few weeks comes in at 145.98. That level also happens to correspond with this high price right here, and maybe we based against that area right here. before moving to the upside. So I think that 145.98 level, let's call it 146, move below 146 and stay below that level would be more bearish for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. Like the euro versus US dollar, the market price action is up and down in a fairly narrow trading range, at least relative to the history. We are just now moving below the 50% midpoint of the trading range since the June low to the June high. That's this range right here. We broke to the downside and we broke to the upside before the end of the month. The rotation has been more to the downside over the last week and a half of trading. Yesterday's trade pushed down toward the 61.8% retracement, fell a little bit below that level of the June trading range at 135.29, but saw a quick snapback rally to the upside. Since then, the price has been moving up and down. We did find support earlier today in the Asian session near the low price that we saw in trading last week, so that was somewhat positive, and the market did try to rally, but that rally is fizzling with the price now moving below the 50% retracement level. So the bears are still in control. We are still below the 100, 200-hour moving average and this swing area up through here as well, keeping the bias more favored to the downside. So that's my look at the three major currency pairs to kickstart your trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.